Okay. All right, here we go. So those are pretty cool little breakouts, huh? Important topics. Or I guess I should say profitable topics. Okay, let's go to our next segment. We're going to talk about how leading stocks act in a bear market, and the relative strength line will be key there. We'll talk a little bit more about the accumulation. You have heard it now from just pretty much every speaker. It's that important. And we'll talk a little bit about character of a stock, slightly different angle than character change. Amy covered IPOs really well. I just have a few stories for you. And then we'll get into the market right now a little bit. And then how we, in our shop, look for ideas, the tools that we use and how we do it. So let's talk about how leading stocks act in a tough market. So here's a chart. Now, first, the scaling on this S&P up here is not very good, and it's because you have this the price and volume on the. This is a stock, okay. This here is the '08 market, and I think we all know that the '08 market broke down more drastically than that and was rather painful. Of course, you were all out of the market because you read IBD and you counted distribution days, right? One thing I will tell you our shop is very good at is being out of the market when we should be out and not getting in when we should be out. And so being able to, it's not that hard actually to find a good stock. I mean, after we've been doing this for 50 years and all the products are designed to bring to the surface the best merchandise of every cycle. That actually, it's not that hard to find the right stocks. Holding on to them, your portfolio management piece, what's your allocation, what's your mix, that kind of, and then of course, as we all know, when to sell. Those are the tougher pieces. So let's look at this tough '08 market, and here's a stock that's done pretty much nothing for a very long period of time. What is that, maybe 3 years? So would you buy or pass? Well, obviously you would pass just looking at that. Or would you? All of a sudden, we have a critical piece of information, right? RS before the price. Scott showed you various examples. Look at how relative with the price, how far, look where the relative strength is, the line, and look where the price is, way down in here. This is now a very interesting idea. And what's our big problem? We're in the middle of the '08 meltdown, right? New low, new low, new low. So you're not buying because you're not going to fight the market trend. We are not trying to be a lone salmon swimming upstream. That's how you get wiped out. And the market keeps coming in, and now our stock, it keeps creeping up. Just like price and volume, heartbeat of stock, you have to have it absolutely down in your mind clearly. Price up, volume up, good thing. Price up, volume down, could be, maybe, maybe not. It depends. Price down, volume up, bad thing, right? Now take that basic and overlay relative strength. Price up, relative strength, line up, that's good. Price up, relative strength, line down, that's problematic. Now, you may not see it, and it may keep trickling up some, or creeping up, but at some point, if that line doesn't turn around and follow that price, you know what happens? You remember when you tried to open the egg and all of a sudden it went splat on the floor? You can get some nasty surprises just by knowing the divergence there of those two critical barometers. This is looking like a rocket. That's that 1 o'clock that Scott was talking about, right? this becomes very interesting. Now, you don't have the right market environment. And you remember Scott mentioned after a really bad bear market, all the patterns are cut up, and so you kind of have to broaden your perspective a little bit and be a little more flexible. This is '08. We don't have to talk about how bad that was. Now we get a follow-through day, right there. We put a question mark because this obviously is not. When you can't find a classic pattern, a consolidation area that's a classic pattern, you kind of junk it into that, well, it's a consolidation, and you have to be real flexible and loose. Well, this is definitely, at best, that. But what is interesting is look at the RS line. How often do you see something like that? That is a very unique condition. Not that powerful. All right, and so you have a little consolidation going sideways after a little tiny pullback. Now, look, I know I'm pushing it a little bit. Remember, this was '08. Okay, and what's our goal? Our goal is to catch the leaders coming out when the market turns. That's our goal. And we know that the strongest leaders tend to come out first. Why? Because they're the strongest. They can't wait for that pressure of the market to be lifted off. And they're up and out of there first. And they come out with a vengeance. And there's a direct correlation in the market with power and distance. The majority of the time, when you see a stock, as this one unfolds, comes out of there really powerful, it's kind of like the boat, you put on the motor at the full speed, the propeller, and then you turn it off and it just drifts a lot further. Okay? You build up that momentum. By the way, I don't like using that word momentum because we are not momentum players. Your goal is to buy the stock right, handle it right through the move, and sell it right. And that has nothing to do with momentum stocks and all of that. You are looking for stocks that are building strength because they're contributing to society with a strong product, service, etc. You get all that. Okay, so let's get back into the chart. So here we have a follow-through day, and what's the rule? You have to step in and buy something. And who felt like buying anything after the '08 massacre, right? And all of us have friends that were absolutely destroyed in that, which it would have been nice if they knew the 7 to 8% loss rule. But I'm a long-term investor. Isn't that what Rusha said? So we picked up very early on the Netflix. Is this valuable? Is RS valuable to us? Picking up way down here. Now, there's a few other things growing up that I had showed to me over and over and over. And one is, if you step back and look at the chart and see where the work has been done, that's one. So, in other words, there's a bunch of work here in that big cup and handle. That's what he would call it. And he uses that as a reference point through what else he sees. Another thing he would mention is, look how far the stock has come. It needs to base. Now, we've talked about that times. But an interesting angle on look how far the stock has come. If you grab the typical investor, they might say, it's really gone a long way. And I'm a little scared buying it up here. Father would say to you, it proves that it can do it. And so your probability is better that it will do more. The only thing is, you're coming up from, you're coming up from split equivalent of about 18, and you're up at around 50. That's a heck of a move. It needs to consolidate. And it does. And it consolidates for a long time. You go through a very long, choppy cup and handle here, but it is what it is. Notice when you try to break out, you come back in a couple more times from that cup and handle, and then you go. So what I had said earlier is you don't want them to continue going and going and going. You want them to consolidate gains, and the big money is made in sitting, right? It's patience. These model book moves, you're looking at a weekly chart, okay? I can remember as a kid thinking, man, I can't believe this. This is only, these 3 bars are 3 weeks, and it seems like an eternity. It's patience. Let it develop. 650% gain. Look at the RS. Just imprint that in your mind. We just don't see that often. You know, coming out of a really difficult market. Now, in the late 90s, you saw that all over the place. How often do we have a market like that? All right, let's look at another one. Again, the scaling is not very good. It should be steeper. This is also 08 market. This is a weekly chart. Look at the 2 weeks where you just drop right before you stop. Can you imagine you're in at 220 and you go down to almost 100? I'd say that's a bad hair day. But what else do you see? Now, you're out of the market. You're in a full-fledged bear market, and it's getting uglier and uglier, especially towards the end. Sometimes they really get bad. Notice how it really collapsed, but then it stopped. And it stopped right around a prior base. Now, that's several years ago, I know, but I can remember the teachings on that. Where a stock stops, that is important. Now, that's a pretty bad break. You're way up here at 400 and you're down to 100. Most people would write this stock off, and you certainly wouldn't touch it. Eric? But isn't it very interesting now? Let me see. Now, was that? Okay, yeah. You're still collapsing. Lower lows. And your stock says, no, I'm done. And it's holding. And because it's holding against a collapsing market, relative strength is at 12 o'clock. Now it's actually very interesting. What you are looking at is a high potential leader in a horrible environment. And Scott said, kicking and screaming, this is doing more than that. It's plain going up in the face of this market collapsing. And then you get your follow-through day, and it's continuing. Let's go one more. Eric? And now you see everything that we have talked about today. You see huge accumulation. Do you remember that little detail Amy said, closing at the top of the range? Look at all those blue weeks. What's going on? Okay, that is strength. That's the big players. Look how it comes from 100. Now we can't see this probably, maybe it's 170 or so. And you have a few weeks where it sort of looks like it's trying to take a breather, but not really. It just keeps going. Look at where your relative strength line is now poking its head up into new high ground relative to where the price is. This is a neon sign screaming at you. You got to buy me. You have to buy me. Forget the pattern. Forget that everybody got wiped out and there's blood on the streets from 08, and then we got a president saying this is the same as the Depression in the 30s. You tune everything out and you look at what is, and this is it. And yes, you would step in. Now remember, the follow-through day rule is going to force you to buy something. And what you're looking for are the strongest stocks at that point in time. And how do you find those? What's your fastest measurement? RS. 9, we're all over it. Is it a 98? If you have 3 stocks that look interesting, one has an RS of 85, one has an RS of 95, and one has an RS of 99. Which one do you buy 10 times out of 10? The 99. And if you see some turnaround stock that has some fabulous story with an RS of 45, do you even consider it? No. you go to 99. You know, one little thing you might do when you're fully invested, and you're obviously in a good market, is go back after you've been in the market for a few months, is go back and double check all your rankings. So you have 7 stocks. Okay, what's the EPS? What's the RS? What's the composite rating? Maybe a couple of others that you like, AD, and just replot the numbers, because that little exercise can help you hang in there with a couple, or reaffirm in your mind, yeah, that's the Michael Jordan I'm going all the way with. Okay. Now, look at this stock. We go from 100 to 260. Okay? You don't want them to keep going. But that is pretty phenomenal. And do you see that they're all blue weeks? The only red is this tiny little red in the circle. This is phenomenally powerful. You are looking at the ultra elite stock early. Very, very early. And there are many people that will say, but you went from 100 to 260, Scott. There's no way. That is an opinion, is it not? It's always funny, if you make a statement like that to my father, he'll just turn immediately and say, well, that's your opinion. Make you feel about that tall, right? So look how, now put it in the proper context. How many weeks was this? 12, okay. So we've got 12 weeks, and this is all the consolidating this stock wants to do. Now let's say you got lucky and you're scared to death, but you did put your toe in the water and you got a little bit somewhere along here, and then you bought maybe a little bit more, but still it's a timid position. You see this is the taking a breather, and you're thinking, you know what, if it starts to go from that point, I'm going to take a normal purchase and step in. And you've got that cushion of those 2 prior trades. You know, have you ever noticed how, it's interesting, we've all made this mistake where we'll get real excited on a stock. The pattern's great, the story's great, the number's great, something's great, and so we overbuy, and it may work or not, but somewhere along the line we screw up because we've got too much. Have you ever noticed how there's that one position in a good year that was a smaller position, you kind of ignored it? Yeah, you know, you can't really do any damage or anything. And you just kind of ignore it, and all of a sudden at the end of the year it turns out to be one of the biggest gainers, right? True? Okay? Just getting a piece is the key. And gradually, as you get more comfortable, you can get a larger position. Okay? Bill's done this for 50 years. Trust me, I've seen him take some positions that would freak any normal person out. But he didn't go into that way initially. He slowly built the position. Okay? We are hawks on our average cost in the shop. Do not let your average cost get out of kilter. How many have screwed up a great stock midstream? Because you got your average, you go, wow, this one, I don't have enough. You never have enough of the right one, so you're going to correct that. So you buy a lot more, and all of a sudden your average cost is here, and then what happens? Whoosh, let's go into a pullback, and then boom, they got you. You're better off with a smaller position that you're comfortable with and give it some latitude. So now, look at that. It's not waiting for anybody. 16 out of 17 weeks up. The one down week is basically a joke. It should be blue also. You start popping up out of that, you're on it. You're not waiting because you're buying brute strength. Now, this is an advanced concept. If a lot of this is new to you, you want to stick with the classic patterns, okay? How often do we have an 08 market, right? A dot bomb market. But you are looking at an elite leader. Look at the relative strength line. It is not quitting. And we're still not at a new price high. And the market's only just starting to get going. And we finally luck out and get a base. At some point you will get a base. If you miss it, and we all miss great leaders, when you miss that great leader, you keep it on the watch list. because at some point it's going to base out. And if you start to see a base forming, now you're stalking that one, right? Every day you're watching it. You know, come on, just put in 2 more weeks. You start talking to the stock. Okay, you need 2 more weeks. Don't go more than 7-9%, you know, and then all of a sudden, okay, now give me some volume, and you're waiting, and then there it goes. And you know what else? The mental on that is unbelievable, because you're in a position of strength. You figured it out before it did it, and then it's doing it just like it should, just like Bill's book says, and you're there. Incredibly empowering. So here we are. Let's say you didn't get this stock at all because you're still putting Band-Aids on from the '08 break. Okay, now you've got a base, and you absolutely positively have to be there. Look at your RS line, new high, right? Let's say you did venture in with that little toe hold, and then you tried, you added here, and now you go into a base with an established position. Look back on a big year you had. It was really that one stock, maybe 2, that you nailed to the wall, right? And you go into a base with an established position and a nice cushion. It's funny. I've heard my dad say before, you know, you think differently when you have a 50-point cushion. I go, well, yeah. The problem is getting to that, right? So here you are looking at the Baidu. And look where we started picking it up. And if you're running the right screens in MarketSmith, you're going to pick this up. Look at the relative strength line. A couple of your speakers are talking about what they dream about. Okay, now you got me. There it is. And again, you don't have to, most people don't get the whole move, all right? You get a few pieces of that. Look how you could also go back in several spots. But we want to profile these elite stocks because this will put you right on the right path to finding the next ones. And history does repeat itself in the market. The only thing that changes are the names. Okay, quick question. Okay, do we wait for a follow-through day? Yes. 98% of the cases, yes. I'm going to show you one that actually goes right before the follow-through day, and you know what? It can be frustrating. A lot of times they get away from us initially, and then we come back and get them a little bit later on. Do not chase stocks. Chasing beyond the pivot is dangerous, and it is the most common mistake. It's what I did as a kid. You get excited because it's going, and then as soon as you get in, I don't know what it is about 4 days later, but about 4 days later is when they come around and they get you. Okay? But in that case, we had a follow-through. These 2 I showed you, we had a follow-through day, and we had no pattern to work with. But we had a stock that was screaming at us, I'm a Michael Jordan. If you want to win games, you need to buy me. Okay, we need to keep going. All right, here's the same '08 market, same horrible market. Look how fast we're accelerating to the downside. Look at your massive volume stepping in. All right, these are the battleships, and they are running for the door. And this is a weekly chart. They're hitting the stock very hard. What is one thing that's very interesting in context of a lot of selling going on? What do you see in this chart? It levels off. Step back, get your point of reference, and all of a sudden, yes, it's come down very hard, but it is leveled off. And as Bill would say, I can repeat it, it stops at a logical support level. Now, to play the story out, we don't really care about the why that much, but let's play it out for a second. What's going on is that there are lots of institutions that have a zone they've predetermined that they're going to support that stock. And that's what's going on. And all of a sudden, notice volume starts tapering again. A good sign. Divergence. I mentioned I heard divergence a lot growing up. Let's talk divergence again. Stock market, new low, new low, new low, new low, yada, 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 right? What's the price doing? Not only did it level off, do you see that, these closes right there? That's kind of interesting. You might circle that in your book. Now, higher lows. When you see a market going down and your stock going up, what does your relative strength do? Yes, you are going up and you are at 1 o'clock. We are interested. This is right now saying I am fighting this market tooth and nail with everything I got. And we get our follow-through day. Now, there's obviously no pattern at all. You don't have the RS in new high, but look where the RS is and how close it is to new high relative to the price. The price is way, way down. But this is, again, the look of a true leader. Yeah, but Scott, it's had just this monster move for years and years and years. You're so late and everyone knows the story. Yes, true to all of the above. Now you go into new high ground and you're still way, way down on the price. Again, this is a stock of interest. The question is, when do we step in? It gets a little support at the 10-week line. We still don't have a base. Look at the RS line. New high again, right? Now we get our first base. So if you didn't get, count the blue weeks again. Isn't that interesting? You see that over and over and over. Get that imprinted. That's your accumulation. So maybe you didn't do anything until there. Now you've got a proper situation, do you not? You had a follow-through day. You now have a base, and you're sitting there, and you're waiting. Oh, notice relative strength is a new high ground. You have all kinds of indicators telling you the probability is very high this stock's going up. And you get that. There it is. Crosses the pivot, you're in. Standard purchase. Now, what's interesting is now your stock finally gets into new high ground, and look at your RS line. Think magnet. The story doesn't end just because it was in new high ground and now your price is up there. The RS isn't quitting, and the RS is telling you what? This stock is much stronger than the market. Much. In the market, strength begets strength. It's a truism. Weakness begets weakness. That's why we don't buy on weakness. Yeah, sometimes you buy on weakness and then it V's and bounces up, but what's your probability that it does that? And what's your probability that it goes down further? Because it's weak. Something's wrong. Strength begets strength. When you see strength, you are attracted to it. Okay? Now, can you get any earlier? And if you're running the right screens, you're going to pick this stock up even before. You'll probably pick it up in the middle of this level off zone. In fact, the Growth 250 has 30 screens. One of them is specifically tagging the RS line. And it would pick it up right here. And then, of course, it gets picked up here, and then a few more screens pick it up, etc. And so the real question is, where do you pick it up and when do you act on it? This was one that we did well with, and we were buyers early on here. Now, of course, it was Apple also, and we bought a decent position in it at that point. And the market looked terrible. Isn't it funny how the market turns when your gut hurts the worst? You know, it's that fool the masses. 600% gain. Look at the RS line. It just, well, it's Apple, right? So let's look at the dot bomb time period. March of 2000 down to October of 2002. Can't get any worse, right? Now, again, the scaling doesn't look like it should. We all know that the bottom fell out. here we are in January of 03, and the market is still going down, and here's a stock that seems to be lifting, but we're scared to do anything. We're stuck, huddled under our rock, right? We're not coming out for anything. And all of a sudden, it forms a nice pattern. You know, there's a direct correlation between these classic patterns and the quality of a uptrend. In other words, if you get an uptrend that's going to work and it's real, you should find yourself in a candy warehouse. There's so many stocks that your problem is, I don't have enough money. I don't have enough buying power. There's too many. I like these, I like that, I like all of these, okay? There's a direct correlation with the quality and the number of patterns you see and the quality of that uptrend. Now, after the bear market of the dot-com era, you're not going to see very many great patterns. All right. Anyway, here we are, relative strength line, comfortably in new high, and the stock price. Look at how you got really tight in that handle of that cup. We really tightened up nicely, didn't we? We go up a little bit and we do a 3 weeks tight. Is that 3 or 4? 3. Notice we come in just for a day or two and then we lift. All right? That's why we never get too excited and we plow in, because the minefield has a lot of mines. You got to be careful. And remember I said the robot thinking? You're very mechanical. Okay, it's done this. I'm going to give you a little bit more of my hard-earned money. You know, oh, you're not behaving well. I'm going to sit with what I got and wait till you behave better. And as I get a cushion, I will give you more. You know, everyone gets impatient with the market. How many of us had a friend come up and say, oh, I hear you're pretty good at stocks. You know, I need to make a few bucks. What do you like? You know, I don't even listen to that anymore. Years ago, I tried to answer and say, well, look, sir, you know, you have to do a little bit of homework so you know what you're doing, this and that. And anyway, long story. All right, where were we? I got thrown off there. We call them the sponges. And you know what? Sponges never make money in the market. You can quote me on that. All right, so we get a follow-through day. Okay, here we are. Now we can act. Imagine if you already established this position. Now, it did break out prior to the follow-through day, and that's frustrating. This is a difficult situation. Maybe you got lucky because of the pattern and you put your toe in. Even a toe in helps the psychological shift that occurs, right? And by the way, this isn't the only stock breaking out after the follow-through day. If it is, then there's a problem. Remember Candy Warehouse? If you only got 2 or 3 stocks breaking out and it's really narrow, you got to be careful. That's not a full-fledged bull market, uptrend. Oh, you know what? That brings up an interesting point. I shouldn't have said bull market. Don't get caught talking about the markets, well, is it a bull or a bear? Okay? That's too broad brush stroke. Are we in an uptrend or a downtrend? You know, this long-term bull market you hear on TV, I'd be really careful, because you don't want preconceived ideas in your mind floating around, because you might hang around the party longer than you should. And all of a sudden you have a bigger give back. Or, no, we're in a bear market and the market turns and you miss that character change and you're late. Are we in an uptrend or are we in a downtrend? And also, if you're looking to be entertained, you might not want to do it with the TV and your hard-earned money. You might want to get your entertainment elsewhere and stick to the what. Okay, the what, not all the whys. Why is it doing this? Why is it going up? Oh, they're going to do quantitative easing now, so that's going to be great for the next 6 months. Maybe. Maybe. How do you know the professionals aren't going to sell into that strength? Oh, but they said the market's going up for 6 months and you're getting deeper and deeper and the professionals are selling into the strength. What happens to you and the market, right? You look at what's going on day by day and everything else walks. That's a really important rule of thumb. Okay, here we are. Now the cat's out of the bag and it becomes very clear. Look at how you had that little shakeout where the arrow is right before that great price action. We get into an ascending base. Now, this is rare, and they're hard to see. Pattern Rec picks them up in MarketSmith. They're hard to see. You tag, it's 3 different weeks that you tag the bottom, okay? And that's how you can see them, train your eye. Well, that is a pattern. And one of the greatest time periods if you want to study ascending bases was the bubble, 98, 99. They were all over the place. Just like in 99, you had climax tops all over the place. Best time period to study. So what's happening is this stock is super strong, and then it needs to consolidate, and the market here, you see the S&P is flat. Okay, that's fine. A lot of times the market will be coming in, and so the stock is so strong that it forms a base with a bias going upward. So you look at your flat base and you kind of tilt it and you go, man, this thing does not want to stop and it's going to go. And when you see this midstream, I'm going to venture and guess 9 times out of 10 it goes substantially further. There we are. So that is a base. If we did not have this position, I guarantee you the PMs would be buyers here. And if we did, we would be adding. And what's interesting is if you can get some of these patterns early to where you've got a sizable cushion and then you get a base, what are you going to do? You're going to stomp on it. You're not just going to buy it. You're really going to press it. Right? And that's what we would do in our shop, is we would make an oversized set of purchases coming out of that ascending base. Now, there's the ascending base at 23, and it runs to 60. Sometimes, a lot of times, when you get these really powerful elite leaders, they accelerate as they're further up. I mean, it's phenomenal. Who's been in a climax top? I mean, is it unbelievable? You know, all of a sudden, you're up 30% in a day or two. You're just going, what is going on, right? You think it's a mistake, and you go back and look again, right? Your buying power's jumping, and then you're deploying that buying power into it. Okay? That's how you achieve the superior returns when you finally get one of these. The key is, do you play it right? This was snitch or steal. Notice at the top the railroad tracks. So let's say we read it in Bill's book. We saw some examples at one of the IBD workshops. And so we sold, and then it kept going up. Now what are you thinking? Oh, I can't believe I sold it. I blew it, this and that. And then look how 3-4 weeks later you were right. It's funny how, is this true or not? One day in the market, you feel like a goat, and then the next day you're the champion. I mean, it is the most humbling thing, this stock market, right? That's why I say if you just stay even keel. You know, some of the traders say my dad has ice in his veins because he can sit through some real punishment, and when it's really running, you know, I've gone up to him in 99, I remember, he was doing really well. And I said, Pop, yeah, you know, this sort of thing. And he just goes, yeah, they're working. Even keel. I can't stress it enough. You know, when you get shellacked, all right, you can't let yourself get too far down, because what'll happen is when you should be responding and moving back in, you're going to hesitate. You're going to be timid. Snitch or steal. Okay, character of a stock. This is actually an important one, and this is critical for your portfolio management, that segment. And portfolio management is very important because those that don't get it, you know, they may do 10, 20, 30%, but someone that really knows what they're doing with the portfolio, that's where your superior numbers come from, 60, 80, you can even make 100% in the right environment. If you're handling the stocks right and you have the right mix. Remember, The stock market is this huge minefield. There's mines all over the place. Portfolio management is one of the most important guides through that minefield. So here's the Triple D. Who's played Triple D? Yeah, I figured about almost a third, 25%. Yeah. How many times did you have to go get the acid pills or whatever? You know, your stomach and all that. All right. What is the quickest way to get a quick read on what the character of a stock that you're thinking of buying? What's the fastest way to get an idea? Get a weekly chart and look left. Look left. The odds are very high that the behavior over here is what you're going to get over here. Okay? Now, isn't it funny also how a weekly chart doesn't always look so painful? And, you know, what are you making a big deal out of it, Scott? It doesn't look so bad. Okay. Now, what were you saying? So, how many people just enjoy being here one day and then down about 10 points and then back up 8 points and then back down 15 points, et cetera, okay? And yet this stock went up, okay? Now there's a couple of things we can learn from this. One, we all know the 3D printing is a phenomenal technology and quite interesting in a lot of applications. There's actually the F-15 fighter jet. I think it has 67 or 70 parts in that jet made on 3D printers, which is pretty amazing when you think about stresses and tolerances. Okay, so it's really, really cool. Just because you've got a really great story doesn't mean the stock's going to go up. And that's where most amateurs get tripped up. They fall back on the story, it's really great, but they don't consider the market environment and the professionals. And so it can be the best story, and the professionals are selling it for whatever reason. Amateurs don't pick up on the disconnect, all right? And there's always enough disconnects along the road to trip people up. Now, back to our volatile stock. This is a winner, and there were times to make money in it. I couldn't quite figure that one out. I think I got out with my fur intact. But I tried it numerous times like everyone else. You make a little bit, but I didn't capitalize on it. Okay, fine. The reason I'm showing it to you is, okay, I'm getting ahead of myself. Here's a corny analogy that will serve you well, I think. In the stock market, you have to be comfortable. We talked about that. You are building a pair of shoes that you know you're going to have to wear, so make them really comfortable. That's your portfolio. Now, the translation is, if you have a whole bunch of volatile, high-octane stocks, if you have the Triple D and then some biotechs and all of that, one day you're going to wake up and you're going to be down some horrific amount, and you're in a whole different place mentally. You just took a punch from Mike Tyson, and now you're wobbling, and you're going to start throwing some good merchandise overboard wholesale, right? Make a big mistake that way. And or you get clipped really bad financially. And so build those shoes where you know that you're in balance, always mentally, okay? You're not greedy, you're not scared, you're just applying the rules and your lessons. And then also, if all of a sudden a stock starts triggering sell rules, and there are sell rules right here at the top, okay, you don't have too much of this, or you don't have too much of the volatile stocks. You treat each stock separately on its own merit, and you say, you know what, it's triggering sell rules. Yeah, but 3D printing is so cool, and the numbers, and they just had it on CNBC, and it's the greatest thing since sliced bread. No, the sell rules are triggered, you sell. Because you know what? There's an old adage, they never get better when they float downstream. And so those that want to argue about the fundamental story, guess what? They usually have the monster givebacks. So let's look at another one. Tesla. Now, this is a current chart. It's weekly. This right there scares me. Huge. Huge. What does it look like? It looks like the egg that's cracking and cracking and cracking. Now, I could go on, like many of you could, about Elon Musk. I think the guy's brilliant. I think a lot of what he does is really cool. It's very interesting. And I think he'll pull off the battery factory. Well, guess what? All of those statements are my opinion. And who cares about my opinion? What's the chart doing? So the next time you're at a cocktail party and Fred starts going on and on about XYZ, okay, when you go home that night, you log on, pull up a MarketSmith chart and look at it. I'll bet you anything it's junk. But that's me. It's funny how the more they talk about it, too, you know, it's junk. And Fred's not telling you about the other 19 stocks he got shellacked on, right? That's the other one. Anyway, so this is late in the game, where we were talking, actually, Scott Sinclair, or someone brought it up over here. We talked about it here in a big way. But this is late, and late usually is costly.